What's up guys, it's Investing Sensei here to bring episode 84 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. I definitely did a lot of changes this week in the portfolio, which I do want to go over. One of the main things real quick is that Nvidia does have some news that I do want to cover in case you guys are Nvidia shareholders. The other thing is, if you guys do follow me in the community post, you guys probably are aware that I did sell out of my AT&T position, and that is due to the merger deal that they are talking about. So I will cover that in detail and give you guys my thoughts on it and what I'm actually going to do with that money, well, what I actually did with that money. And I did actually put a spreadsheet together because I want to show you guys the numbers there. But you know, overall, you guys already know that every single week we come back, we go and kick off these scripts, and we finally last week hit $3,000 in projected annual income. That was actually our first time, and so you guys already know that since I sold out of my AT&T positions, this is actually going to go back down, and this is actually going to affect our Q3 quarter of dividends. So we should see a big drop because AT&T did put quite a bit of money into the projections here, so we are going to see that decline. But overall, long term, we are going to continue to see it recover and go back upwards. So that is one of the things. I do have another spreadsheet that I ended up putting together for you guys, which is what I ended up doing with the money with AT&T, and I want to show you guys the numbers on that. So definitely stick around for that. I want to show you guys all of that. And but overall, the portfolio right now is at $165,634.39. We have about 9 cents in the portfolio for the cash balance. And if we look at the value over time, you'll see that there's this little dip here, and that is where we actually ended up selling of our positions. I actually sold out of 4 other positions that I did sell out, and I will cover that, and I'll tell you guys why I did it and where I ended up putting that money into. So one of the things here is we've been fluctuating around 165,000 to 168,000. I think we'll start moving upwards in a bit, so definitely we'll see that in a couple coming weeks, because we continue to come back every single week and we add more money every single week, $100, and we see this projection continue to go upwards. Of course, we're going to see it drop a bit, and then we're going to see it come back up. So it's kind of almost representing this overall drop here where the correction happened. That's how the quarterly payouts is going to look. But overall, it's going to trend upward. But the first thing I want to show you guys is the Nvidia news. In case you guys are Nvidia shareholders and you guys are not aware, Nvidia announced a 4-to-1 stock split. So basically, the company board of directors have already approved this move, and they want to do it because it's going to become more accessible for investors and employees. The other thing here is that basically you're going to get 3 additional shares for every 1 share of Nvidia that you have at the close of June 21st. The other thing here is that they will basically restart trading this on July 20th with this new adjustment. The move will require the shareholder approval at the company meeting next month. So I'm assuming by this is that it's still not set in stone that this will happen. It just got announced, and it did get approved by the board of directors. So we'll see what happens with that. But let me know what you guys think on the Nvidia stock split. If you guys excited about it, you don't care. I personally don't care, but just in case you guys are interested, or is this the first stock split that you're going through, this is my current Nvidia shares that I have, about 42 shares. Basically what you'll do is, I'm going to pull up the calculators just so you guys know. You just multiply your number of shares by 4. So if we have 42 shares, we're going to multiply by 4. By the end of the stock split, we should have about 168 shares of Nvidia. The other thing here, average price, you're basically going to grab your average price. So for ours is $143.10. You just divide that by 4. That will be your new cost basis for Nvidia per share, so $35.77. The other thing as well is that let me pull up the calculator just so you guys can see the math behind here. Nvidia is trading about $600, you would basically just divide that by 4. So Nvidia, after the stock split, the price per share will be around $150. Overall, you won't see a difference, so we will still be up about $25,000. We would just have more shares, our average price will get decreased, and then the overall price of Nvidia will decrease as well. So let me know what you guys think, and the stock split. Are you guys excited? Don't care? I personally don't care as well, just again mentioning that. But let's go and jump over here to the activity, guys, because there is one thing that you guys probably already seeing, which you already know, is that I ended up selling out of AT&T, $8,231.49. I actually sold out of 4 other shares, well, 4 other positions here, and I'm going to talk to you guys why I did it. So first thing is the sell here of AT&T. It's almost $8,000, and let's go ahead and cover that for anybody that is brand new or is not aware. So this is an article that I was reading. So what AT&T's Warner Media spinoff means for your dividend. So this deal is definitely going to include a cut for AT&T's dividend, and overall right now I believe AT&T's is trading a little bit above 6.5% dividend yield, but the deal here is that AT&T will basically be receiving $43 billion in cash and securities in the deal, because they will be spinning off their Warner Media properties such as HBO and all these other properties that they do have, because they're going to combine them with Discovery assets, which has like Animal Planet, HGTV, and they're going to basically create a new public traded company. Obviously the company, they don't even have a name for it yet, and if I get my highlighting correctly, but yeah, they don't have a name for it yet. So basically what they want to do is spin off this new company, and they want to have it to where it can scale and compete with Netflix and Disney. So I'm definitely not, well, personally I'm not big on this deal. I actually sold out of the whole position, as you guys can see, but the company is expected to come into the stock market, I believe, in 2022, and overall we're going to see why the dividend is getting cut. So AT&T, after their spinoff, they do plan to have an annual dividend payout ratio of 40 to 43%, which means that they are going to actually slash their dividend. So that's going to be almost like a 50% reduction. So it's going to be around the 4% dividend yield, which in my book I don't really like, because AT&T doesn't have that much growth. The only thing that I was excited for AT&T was HBO and the dividend aristocrat that they had, and they dropped both of them. I will definitely drop both of them as well. But the thing here, guys, if you are still invested in AT&T shareholders will receive 71% in the combined media company that basically is going to form in 2022, and Discovery shareholders will own the remaining 29%, and then AT&T will receive $43 billion in cash, debit securities, and Warner Media's retention of certain debit. The new media company will carry $55 billion in debt. So how bad is that, guys? So whether the new media company pays dividends remains to be seen, but it certainly will have higher growth prospect than AT&T. And so that is pretty bad, because the new company is going to start off with a huge debt on their balance sheet. And you know, I was invested into AT&T because of HBO and the dividend aristocrat that they were paying. I know that they didn't have a high dividend growth due because they already had a high dividend yield, and you know, I had that $8,000 invested in there, collecting a lot of money there, but you know, they're gonna cut it. They're already spinning off a new media company, and personally, if I wanted to actually invest in that new company, I can just hold off and invest in it. But They don't even know what the name's going to be. They still are in talks about it. So much uncertainty that I would rather put my money into other companies that I know are going to grow and I know what's going on with those, than something that, you know, they don't even have the name for the new company. So we'll see what happens there. I have completely sold out, guys, as you guys already saw, and I'm gonna actually jump over here to the activities. I'm gonna show you guys what I bought and with those $8,000. So we're gonna filter all of this out by the 17th of May 2021. If we look at the very bottom, you'll see that we did collect some dividends this past week. On the 17th, we got some dividends from BTI, $11.16, and then Procter & Gamble, $6.47. And then we went and reinvested some of the dividends from the previous week, which we bought some Lockheed Martin. You guys already know that I have been buying a lot of Lockheed Martin. And then you guys already saw that on the 17th, I did sell out of AT&T, which I'm gonna actually jump over in a little bit to the Google Sheets, because I do have that new spreadsheet that I created to show you guys the numbers. So on the 18th, after I sold out, I went ahead and did 7 buys. So this is basically reinvesting that money. And so I bought $1,825 of Apple, $1,824 of Microsoft, $1,000 of Lockheed Martin, and then $1,000 worth of Costco, only $600 worth of AbbVie, and then $1,000 worth of Starbucks, and then the last company here is Visa, about $1,000. So that is a total about $8,200. And so I'm gonna jump over in a little bit again, show you guys the numbers on why I did that. All these companies that I did buy have a really low dividend payout, which we're gonna see. Basically, we're gonna take a hit in the projected annual income, but I'm fine with that because we are investing this for 20 plus years, and you know, overall this is going to pay off long term. But on the 20th, Caterpillar paid us $5.27. I went ahead and deposited the $100 that I deposit every single week to dollar cost average to the portfolio, and then I actually paid $200 into my M1 borrow, and then we reinvested it on the 20th. We did 1 buy, and guess what, guys, we bought some more Lockheed Martin. So we are going to continue doing that until we build out a pretty good position. On the 20th, we did 4 sales, guys, $6,107.72, and I actually sold out of RTX, so it was almost $500. I sold out of Cisco, so I'm gonna talk to you guys in a little bit once I jump over and show you guys what I reinvested in this. And then I actually sold out of BTI, and I sold out of Broadcom. So that was almost $6,000. RTX, I went ahead and sold out because I've been putting most of my money in Lockheed Martin. Cisco and Broadcom, they have a business model that I don't think can scale as much as something like Apple or Microsoft, that have something that's almost a software service that can scale and will grow. And it's just really awesome how Apple and Microsoft have these business models that they will continually get new subscriptions every single year, and we can see that projection. And so I don't know about Cisco and Broadcom, that, you know, I think I would have a better time putting my money in some of these other companies that can grow it. BTI, I went ahead and just put my money in a different consumer company, especially because I don't really understand BTI as much, and it's a sin stock that I would rather put it in Altria. So that is one of the things there. And so the other thing here, guys, is I went ahead and deposited $1,500. This is actually just a payoff M1 borrow, so this actually didn't get reinvested into the portfolio. So we did the buys here. So on the 21st, you guys already saw, we went ahead and bought $1,465 of Microsoft. And so we bought some Home Depot. This was actually the money that I actually sold from BTI. I think I can get a better return with Home Depot in the long term. Lockheed Martin, I went ahead and bought them. Well, I guess I reinvested the money from the RTX sell. And then this is also from Cisco and Broadcom. So I went ahead and bought $3,500 worth of Apple. So you guys already see that there's a lot of companies here that are low dividend yields. So this is going to tank our projections over time. But 20 plus years, we will be happy because these companies will appreciate much more, and the dividend CAGR is way higher, guys. So we will see how that plays out. I'm really excited to see that. But before I jump even over to the Google Sheets and show you these numbers of AT&T that I put together, I want to show you guys real quick the M1 borrow on where I'm doing with that. So far I am down to $14,706.18. You'll see that I did pay off $200 and $1,500 last week. So I'm going to continue paying this off, seeing how that goes, and we'll eventually get back down to zero. We're borrowing at 2% interest rate, which is nothing. The money that I do have borrowed, I'm definitely collecting way more than 2%. So it's money well borrowed at that point, as you guys can see. The other thing here, guys, let's go ahead and jump over to the Google Sheets. Before we do actually do the projection, I am going to show you guys the numbers, but we're going to see this drop, so definitely stick till the very end. We're going to see how bad this drops with the AT&T cut. But if I go over here, this is actually a spreadsheet that I put for you guys. So this table here, this is initial data of me investing. This is more like just a simulation. Let's say the $8,000 that I sold out of AT&T, if I had basically invested the $8,000 worth in AT&T at the current price of $30.01, I would have about 266 shares. And this is just the information that I collected. So you'll see the annual payout is about $2.08. 5-year CAGR is what how much they increased their dividend at an average of 5 years. So it's about 1.83%. This is how much they've been growing their EPS, which is kind of a value that I took off some of the other sites, and then their payout ratio and their dividend yield, which for some of these informations, I'll show you guys where I got that. So you can look at Seeking Alpha. I have AT&T on the basically dividend here, and then look at the dividend summary. This is the dividend yield, the annual payout, and the payout ratio, and the 5-year CAGR. So this is where I got this information. I did it for every company that I have on that sheet. The way I got the 5-year EPS here is I went to csimarket.com and I looked at AT&T. I looked at the revenue 5-year average growth, which was 3.19%. And so that is where I got that information. And then I used this calculator, which is buyupside.com, and I just put the information here. So you just put the initial number of shares, the price, the annual payout, the CAGR, and then the EPS that we found, and then the number of years. And then I got my values here for the dividend reinvestment. And so that is how I got that value. I'll try to remember to add the links to all 3 of these so you guys can do your own projections if you guys are interested. But I did all of this for Apple, so this is the information we needed. We didn't really need payout ratio. I just wanted to show you guys here on the payout ratio how much more room they have to increase the dividends, and then the dividend yield, so you guys could see that. But at the very bottom, well, I guess here, just I do have the link here for the EPS, and then the calculator, I do have the link here, so I'll definitely try to put it in the video description. But here's the results. All right, so AT&T, if we had basically reinvested this is assuming that we put our $8,000 in AT&T, we don't add any more money to AT&T, and so at 10 years you would have 497 shares. You'd have a total value of $20,000, and then this is how much they would pay you out, and annualized return would be about 9%. 20 years you'd have about 862 shares, and then the total value at 48,000, and then dividends paid 26,000. At 30 years, you see that this is compounding, right? We'd have 1,397 shares, and then we'd have a total value of 107, and so you'd have about 9%. And then let's look at these other lower dividend yields. So Apple, 10 years, you guys can see all these. And actually, I'm not going to cover all of them. I'm just going to pick a couple. You'll see with Apple at the 30-year mark, we would have a value of 88,000, right? And then dividends paid. So this is a company that has a lower dividend yield. And so you'll see that some of these other companies are actually, well, I guess Apple is the only one that's really underperforming AT&T. But overall, you'll see that Microsoft, by the end of the 30 years, you'd have $137,000 value-wise, and Lockheed Martin, you'd have a $203,000 versus the $107,000. Costco, $113,000, and AbbVie, this is actually one of the values. So when I put this, I was kind of shocked with the, you'd have 3,900,000, almost 4 million in value. I don't know how accurate this would be. The main reason is because AbbVie does have a 5-year CAGR of 18%, and the EPS is like 14-15%. I would assume that this would decrease as time goes by, but just to keep it consistent, I went ahead and just added the values anyways that they were projected. Starbucks, you'll see that it would be like 4 million. And then Visa, $246,000. So overall, you guys can see that majority of these companies would outperform AT&T. And one of the things is that when I did reinvest the $8,000 into AT&T, you'll saw that I did spread out the money into these companies here. And the reason is because I do want to be diversified. What happens if something happens with AT&T? Well, not AT&T, but Apple. I don't have all my money invested in that because all these other companies would offset it. And that is why I have it all diversified. And over time, I will continue to contribute into these companies and we'll see this grow. I hope this number is correct. So we'll see what happens with this one, as well as Starbucks. Starbucks, I don't see that projection as high because remember that the payout ratio is around 60%. So, you know, I'm just trying to stay consistent with the current numbers that I did find from the websites. But definitely take this with a grain of salt because some of these numbers might be incorrect. But I put this early in Sunday morning, so we'll see how that goes. Definitely pause it at this point if you guys want to take a look. And then the links are here. I'll try to remember to add them in the video description. And so I don't want to make this video any longer than it already is. So let's go ahead and find out for the dividend payout actually. So let's see if we can actually kick off the script, see if anything new got declared. So dividend portfolio tools, get latest dividends, see if this is actually going to work this time, because I know some people have ran into it sometimes where it doesn't let you run the script due to many people running it. But it looks like it's running. This actually has all of my portfolio updated with the newer tickers that I did remove. And so it's running at this point and it looks like it's done. You'll see that we are going to get a Starbucks payout on the 28th of May, and that will finally wrap up May, and then we'll start June, and it'll be exciting to see all this come in. So the next thing here, guys, is I'm going to go over here to settings, and we're actually going to go ahead and delete this. And so we're going to jump over to personal capital so that we can grab the new update of the portfolio and see how bad we actually decreased our projected annual income. So let's go ahead and jump over there. All right, guys, so we're here at the personal capital, and I went ahead and pulled up my M1 account. So if we look at the holdings, you'll see that we do have this green button. This is just to copy the content. You can see the scripts, they're completely free, they're available, but I'm gonna sort this out by alphabetical order. You don't have to do it, but I usually like to do that. So you click on the button, it copies the holdings of this table into your clipboard. We can jump over back to the Google Sheets, right click, paste special, values only. At this point, we have everything good to go. You'll see our holdings. This will basically get re-updated once we kick off the scripts. Let me double check that I have everything copied from last week. So, yep, we have everything. We're ready to go. Let's jump over to holdings, click portfolio tools, update portfolio holdings. This will get wiped and recalculated. So we can jump over to the dashboard now. So how bad will this get? So, we're definitely gonna be under the $3,000 mark, so we're gonna have to move back upwards, and that was a huge hit, guys. We are now down to $2,456.95 compared to the $3,020.75 that we were at. Our monthly average went down almost 45%, or $45 or so. So $204.75 compared to $251 on the week. We went down to $47.25 compared to $58. And then for the day, ouch, we went down to $6.73 compared to the $8.28. And then the hourly, we are making only 28 cents every single hour now instead of the 34 cents. And then hourly work wage, if we were to send our portfolio to go work a 40-hour work week, they would actually get a deduction. That would only be getting paid $1.18 compared to the $1.45 that they were getting paid. I guess they were doing a bad job or something. But yeah, guys, overall, this did take a big hit. AT&T was making a lot of the profits for us, but I already showed you guys the numbers. Long term, some of these companies that I did reinvest this money into will pay us very great, because we are invested in this for 20 plus years to 30 plus years. So we will see those benefits, as well as a lot of capital appreciation from these stocks. And you know, our dividend yield by that time will be definitely over 10%. So I'm really excited to see how that plays out. And we're actually going to see this drop, but yeah, this was a super long video, guys. Sorry about that. If you did actually stick all the way to the very end, definitely do a hashtag RIP, rest in peace, AT&T. So just RIP T, and then I'll know you guys stuck all the way to the very end, and you guys are the best because you guys watched it till the end. So thanks so much. I'll catch you guys in the next video. Be sure to subscribe, hit that bell notification if you haven't done so already. Bye, guys.